Right, so this is video B of FAC 376 for lecture 1 discussion through Grad Quest. So now we were about to get into the 5 elements of the financial statements discussion, so which is of course consisting of asset, liability, equity, income, and expenses. So let's get started with the first one, which is assets. Right. So with asset, by definition, now, what you need to take note of here, when you're dealing with assets or even any one of those elements to the financial statement, you'll be given theory questions where you need to discuss what it, like, okay, why are you saying that there's a present economic resources identifiable in the given case scenario? Why is it that you're saying that the entity, there's elements to do with the controlled by the entity aspect in the scenario, right? Because they'll give you some sort of like a transaction to say this is what transpired, and then the value of the asset is this X amount, they'll specify, they'll tell you whether it's trade receivables, whether it's inventory, whether it's a vehicle, PP, or a property, any of the property, plant and equipment asset category, they'll be very clear. But now their question would be for you to conclude whether the transaction consists of something that can be attributed as an asset or not. So for you to get to that conclusion, first of all, you need to discuss each one of these elements of the definition. And then what do you do at the end? You give a conclusion. So if you're doing taxation with me, already this is giving you some ideology to say similar to something about gross income. You remember?
Yes.
Yeah, so it's almost similar, but in this context, we are dealing with financial accounting. So obviously, yeah, but it's similar. The only difference is that this is purely accounting. So there's no case laws that you have to deal with, like what we have done with gross income definition. Anyway, coming back to accounting, elements of financial statements, asset definition. The first aspect, element to the definition of an asset is that it's a present economic resource. It means something when you're saying that it's a present economic resource. So when you say that it's a present economic resource, what does it really imply? So for an asset to be considered as a present economic resource, it means there has to be elements of a right that the organization is eligible to exercise. So if there's an economic resource, it means that there is a right that the organization is allowed to exercise. Okay? Number two, but I will explain it in detail, don't worry. So it's a present economic resource under the control or controlled by the entity. In this case, it will be the reporting entity, resulting from past events. So there has to be a historic event that transpired which resulted into an existing exercisable right in form of an economic resource that the organization is allowed to put to effect. Now, resulting from past events, and then the right has the potential to produce economic benefit. This is just one thing. A right has the potential to produce economic benefits. Right. So that's what actually makes up the definition of an asset. Are we together?
Yes.
Right. Now let's explain what it means when you're saying that an asset is a present economic resource. So if we are saying that an asset is a present economic resource, it means that the reporting entity has a right. The right, or which is of course the economic resource here, it has potential to produce economic benefits for the business entity. If it's an economic resource, it has to somewhat produce something to the benefit of the organization. But for you to have the benefit, first of all, you must be given the eligibility or the right to exercise in this case in order to produce economic benefits. So if we see that there's an element of a right or a resource that has been allowed for the organization to exercise, then we know that we're probably dealing with an asset. What about if it was a liability? So with a liability, there has to be an obligation. Opposite of a right is that there's an obligation, right? So let me further elaborate with regards to an economic resource. So yes, it's a right which can be exercised by the organization, which should be able to produce economic benefits for them, right? And so when you're saying the right, it's the right to either to receive money, or the right to receive goods or services, or a right to use the asset or to sell the asset. It should have the potential. So all these rights, whether it's the right to receive money, right to receive goods or services, or the right to use the asset or to sell it, it in any case has to produce an economic benefit to the organization. That's what a present economic resource should do. So when you're saying to receive cash, think about the cash and cash equivalents. Think about the trade and other receivables. If people are owing you money, you've got the right to receive money from them. Inventory, when you buy goods, you've got a right to receive goods in form of what? Inventory, right? If you've got a right to receive a service, again, that's also another potential economic right or economic resource, as it were. If you've got the right to use a particular object, physical in form, meaning to say like a property, plant and equipment asset, for example, if you've got the right to use it to your benefit, so the use of that asset is leading to production of, or rather, it's leading to benefits which are economic in nature flowing into the business, then we know we are dealing with an asset. So think about it this way. With a property, plant and equipment asset, you've got the right either to use such assets in running your day-to-day operations. Think about your land and buildings. You need the land, you need the building to have a structure, to have a structure in place where you are carrying out your operations. So if you've got a right to use such a property, that can be considered an economic resource to the business. If you have got a right to sell the asset, think about the inventory that you have acquired. If you've got the right to sell them so that in the process you are able to, to receive revenue, then obviously that means we have an asset or an economic resource to deal with. Controlled by the entity. What does it mean when we say that the element, the economic resource is controlled by the entity? So control under normal circumstances happens if the entity in question has got the use direct, they've got the ability to direct the use of the economic resource. Excuse me. So in other words, the entity has got the right to decide how to use how to use the asset. So for example, they can decide how the motor vehicle should be used. There will be a policy defining the purpose by which the motor vehicle, delivery vehicle in that sense, how it ought to be used. Should only be used for business purposes, not personal agendas, okay? Right. And also control it can be evidently seen if the entity in question has the ability to obtain the benefits that flow from the resource. So if they've got the ability to receive some economic benefit as a result of that asset, then yes, we can simply come to a conclusion that okay, they've controlled them. But if they don't have the ability to control the benefits that's going to come as a result of that resource or the right that they've been given, then we are not dealing with an asset. It does not qualify. Is it making sense?
Yes.
Beautiful. Resulting from past events. Elements of financial statements, asset definition continued. So if we say that an asset is an economic resource controlled by the entity resulting from past events, what does it mean? Resulting from past event, it simply refers to that fact that the event itself that resulted in the right that has been given, economic resource given to the entity. For that economic resource to be in existence, it either has occurred on the date or before the reporting date of the business in concern. So what do we mean? If our financial year is ending on the 31st of March, an asset can only be recognized in the year ending 31 March if ever the asset was acquired before 31 March or exactly as on the 31st of March, which is our closing period or the reporting period in this context. That's the only time we can be able to recognize that asset in our books, of course, at cost in that case, because that's the year in which it was acquired. Right. Very, very important. And then, of course, we get, okay, before I get to the definition of a liability, I want to show you some things on the whiteboard screen. I want to show you some things on the whiteboard screen. Okay. Just one moment. Right. Okay. So yes, I've explained the definition because I know for a fact they will ask you to discuss certain amounts, whether they meet up with the definition of an asset. But over and above that, when we get to the practicality of questions pertaining to the statement of financial position in particular, you need to understand that the assets can be categorized. All right. Assets can be what? Categorized. So here I'm going to simply put it as category of assets. Can I put it this way? Okay. So I'd rather put it, okay, I want to change the color. Just a moment. Let's put it in blue. Right. Category of assets. Category of assets. Right. So obviously there are two categories, which is an asset can either be classified as a current asset, or it can be classified as a non-current asset, right? Now, what is it that brings the difference between current assets and non-current assets? By virtue of description, a current asset, it's an asset. Do you know what a current asset is? Hello? Hello?
Hello, I'm here. Sorry, I just got interrupted by a call.
Sorry. All right, no problem. So we are saying that, oh no, sorry. Ish. Oh, this thing, what did I do now? Okay, I don't know if it can allow me to. All right, anyways, so that's a current asset by definition. So it's an asset okay, maybe let me just erase this entire thing and start it all over. Because this text thing, once you move it or you change some things, it would, delete. So we are saying category of assets. Sorry about that, guys. I just need to restart this for the sake of presentation. So category of assets. So assets can be classified in any of the two ways. So you've got current assets, which can be defined as assets with a useful life of a year or less. So in other words, their useful life should never exceed 1 year. Then you would have what you call non-current assets. So these are, assets with a useful life beyond 1 year. Am I making sense?
Yes.
Right. So you're familiar with this, and
yes.
Right. Now, let's try to break down and give examples of these things because it's important. So let's start with your current assets, all right? Can you give me examples of current assets that you know? Current assets that you know? Let me give you a hint.
Sorry,
Mhm.
I current. I just get interruptions. Let me move from where I am.
Repeat again.
I'm getting interruptions. I need to move, change.
Oh, okay. Sorry about that. All right. So with current assets, we've got inventory, trade and other receivables. What else? Bank, or what they normally call cash and cash equivalents. Still under the category of current assets, you would also have what else? VAT input. It's an example of a current asset, okay? So the list goes on and on. I'm just trying to give you typical examples. Then, of course, with non-current assets, what do we have? Non-current assets. So in the group of non-current assets, that's where you find property, plant and equipment assets. What are these? These can be anything like a plant and machinery. This can be anything like land and buildings. This can be anything like machinery. Okay, machinery, I've mentioned about it. Equipment. What else? Crane, right? What else? Motor vehicle. All these are typical examples of property, plant, and equipment assets. Then, of course, you've got financial assets. And with financial assets, that's things like your fixed deposits and other things, but which I'll talk about later. But so I'll just leave it as a category of financial assets. So that's what makes up non-current assets typically, because it's also important over and above the definition to also know typical examples of what these things are. So I'm going to take you to a different screen just so that I can show you some few things here. All right, just a sec. I want to change the screen so that I can share some info with you pertaining to some of this subject matter. Because it has to make sense. I want you to be in a position where after we've discussed these things and you get a question, it should never be a hassle for you. It should be easy target, easy goal for you. That's what I'm trying to achieve in this discussion. Okay. Okay. I want to go to the part where they talk about assets so that I can show you some few things, because I also wanted us to maybe look at an example and then the other aspects we'll talk about them on a different day. 2 lectures, I think, on this should be enough. Then we get to discuss about other things. Okay. Okay, there we go. So let me share the screen so you can see what I wanted you to see. Sorry for keeping you on hold for a while. Yeah, there we go. Just confirm if you can see the screen.
Yes.
Wonderful. All right. So I want us to look at, okay, no, don't worry about this other part, but I just want us to look at the examples, right? And there's a reason why I want us to do that. because I want to make sure that you understand these things. Right. In example 2, assets, various. So the accountant is concerned that the new asset definition in the conceptual framework will result in certain items which are currently considered to be assets, right, to no longer meet the asset definition or vice versa. So what was the question here in this case? The question was, according to the required part, they asked you to briefly explain to the accountant whether his concerns are valid. Remember, what is the concerns of the accountant? His concerns is that because the definition of assets has changed according to the conceptual framework. So his concern is that it might result in certain items which are currently considered to be assets to no longer meet the definition of assets, which is absolutely incorrect. So question number 2 was now saying, using the new asset definition per the 2018 conceptual framework, briefly explain whether the following items will still be considered to be assets. All right. Definitely inventory will still be an asset. Okay. Definitely trade and other receivables is still going to be assets. Cash at the bank, same story. Land, equipment, investment in shares, as well as investment property. Right. So all these are typical examples of assets. So what you are seeing here, you are seeing a typical category of current assets, and you're also seeing a combination also, of course, involving non-current assets. But all right, let's try to answer the questions according to what they've asked you. So the first question was saying, briefly explain to who? To the accountant whether his concerns are valid. So let's see what is the response. So the response is that the accountant's concerns are not valid. The application of the new asset definition is expected to result in most cases in the same outcome. Had the old definition according to 2020. So when I was doing this module, that was after 2010, obviously. So the definition we are applying was this one for 2010, because I did this in 2015. Right? So obviously we use the old definition. That's why I had to update some notes here and all, so that at least we align to the most recent ones that you guys are using. Right? So obviously the concern of the accountant is invalid. Now let's answer the second question. Using the new asset definition as per the 2018 conceptual framework, briefly explain whether the following items will still be considered to be assets. Well, let's look at the first one, which is inventory. So is there a present economic resource? Yes, there is. How do I know that there's a present economic resource as far as inventory items are concerned? Because we've got the right to sell the inventory. Remember, what is an economic resource? It is a right that the organization has. A right means several things. It can mean a right to sell the asset, a right to receive cash, right to use the asset in any way that they want, for as long as it's aligning to their operations. And okay, so if they sell this inventory, is there any potential of economic benefits coming to the organization? Well, yes, there is. So if there's a right, essentially the right should potentially result in economic benefits flowing into the business. So in this case, when you sell the inventory, the economic benefit would come as an inflow of money from the inventory that which would have been sold. Another attribute or element of the definition of an asset is that it should be controlled. The question is, how is this controlled? All right. So there are other aspects about control that you need to know. I just did not put them in the note because they are there also in the textbook, but I didn't want to put like as if now I'm literally, how can I put it? Rewriting the textbook altogether. So I had to give you the notes from a high level so that at least you can have an idea of what is happening, but also at individual levels, I would expect you guys to go through this information on your own time as well. So obviously, yes, the inventory will be controlled through legal ownership. Why? Because the organization owns the inventory. They've paid for it. Was it as a result of a past event? Yes, because they purchased the inventory. And that's how they gained the control. So in this case, it means inventory would satisfy the definition of an asset. Does it make sense, sister?
Yes, it does.
Right. But I would expect you to do the exercise for the others like trade receivables, cash and cash equivalent. Maybe let me do trade receivables, cash and cash equivalent, then, but the other ones, you may try to do them in your own time. Let's look at trade receivables. What does trade receivable mean? It simply means you have a right to receive cash, right? So what is the economic resource? Is the right to receive or to collect the money that is owed to the business. Now, if you receive this money, would there be any flow of economic benefits? Yes, there is. Through what? Through the cash that we are receiving. That cash, it will be recognized as part of our revenue anyways. Do we have the right to control the trade receivables? Yes. Why? Because there was a legal contract to sell the goods to the debtor in this case, which resulted in that trade receivables being in existence. Was this as a result of a past event? Yes, there was a past event. Why? Because we played our part to perform the obligation to the contract. Now the other party has to perform their part to the contract through paying us what is owed or due to us. Is it making sense in this case? So when they're asking you, for example, to check whether an amount it meets the definition of an asset, this is what they are asking you to do. So when you look at the first element, you bring evidence given in the scenario to justify whether there's a right to be exercised by the entity, whether the right can be controlled by the entity, and whether it is as a result of a past event. So I want you to look at attributes here that are key in assessing this evaluation. Present economic resource, controlled by the entity, past as the result of a past event. Is the same thing with the rest of these assets. Can you see that? Present economic resource, controlled by the entity as a result of past event.
Yes.
Present economic resource, controlled by the entity. So control, obviously, there has to be some form of legal confirmation, all right, that seems to suggest that the organization is allowed to perform, or to receive certain economic benefits from the existence of such an asset. Right. So this was just to help you to understand what an asset is. Now, going back to our slide, sure. Do you have any questions with regards to assets so far?
No, so far so good.
So far so good, ne?
Mm.
Right. Now I want to talk about a liability. Now with the liability, by definition, a liability can be defined as a present obligation of the entity. Notice there has to be a present obligation, not a right. So the opposite of an obligation, it's a what? It's a right. It's an economic resource. So a present obligation, the opposite of it is the economic resource. So so with the liability, it's a present obligation of the entity to transfer an economic resource. So they're obligated to transfer an economic resource, and normally it will be in form of money anyways, as a result of past events, which could lead to a duty or a responsibility that an entity has no practical ability to avoid. So once the obligation is raised, the organization is obliged to exercise to the terms of the obligation of the contract in question. Now, let me bring you to the whiteboard screen because I want to explain a few things about a liability, because it also has got categories similar to the assets that we're talking about recently. Okay. To look at it this way. So category of liabilities, category of a liability. Just two as well, like what you had with an asset. So there's what you call current liabilities, and then there's what you call non-current liabilities. In fact, let me put them in plural so that I'll be able to enlist several of them. And of course, so what is the current liability? So I'll just simply say these are debts right? Which can be settled within a period of a year or lesser. Are we together?
Yeah.
So with this one, these are debts which can be settled after a period above a year. Simple as that. That's what liabilities, I mean, this is just to help you to understand the different categories of these things. Then, of course, we have to then talk about examples of these things. So let's have a look at some examples, these things. So, okay, with current liabilities, and I'll also show you from the textbook. So with current liabilities, you've got what we call trade and other payables. You can also have cash and cash equivalents here, if ever we are on overdraft. So cash and cash equivalents, and in brackets, I'm going to put overdraft so that you understand what qualifies cash and cash equivalents in this case. So this is normally if the company is on overdraft. Then you have a cash and cash equivalent, which will be classified as a current liability. Then, of course, you also have short-term loans. I'll explain what short-term loans are. Or do you know what it is?
Yes, those loans that are payable within a period of a year. Those that normally don't exceed a certain amount of money.
Huh?
I'm saying the short-term loans are those that you can pay within a short period.
Yeah.
Like
So it's
maybe
it's loans that are repayable. Well, it's part of it's just a portion of the, yeah, it's those loans that can be repayable within a shorter period. And then you've got a portion. All right, short-term loan anyway, it's just the same thing as like, it can be in two. So you can have those short-term loans, which are just, within the repayable within a period of less than a year, but you can also have a portion of the long-term loan. All right, portion of long-term loan, which are repayable within a year. So yeah, it also falls within that category of current liabilities. What about non-current liabilities? That's where you have things like long-term loans, mortgage, debentures. What else?
as your installments form part of your non-current liabilities, like your car installments.
So lease liability there. That's what it would be.
So with
But this
portions
is
of the
it's not part of this. It's part of this one. Sorry.
so this lease liabilities, is it not portion of the long-term loans? Does it not form part of that?
Repeat again.
Lease liability, does it not form part of the portion of the long-term loan?
The repayments part of it. But you see, there's a lease liability portion that is current, and there's also a lease liability portion that will be non-current.
Okay.
Yeah. So the portion that is current, it's the one which will be determined on the basis of the fact that they'll be repayable in the next 1 year or 12 months. But then the part that is still remaining, which still need to be paid, especially when you are under a lease agreement, that is the part that is considered non-current. Is it making sense?
Yes.
Right, because you get cases like that. But for now, we're just touching the surface, but it's just because I wanted you to understand what assets are. All right. So far, so good.
Yeah.
I mean, what liabilities are? Sorry, I was talking of assets. All right. So what I'll do for today, I'm going to end it at the liability definition. Then I'll pick it up on the equity and incomes and expenses in our next discussion. I'll also do a practical exercise. Two of those, there will be 2 questions I'll do with you, practical exercises where they are asking you about definition of an asset, definition of a liability. And if time allows, we might also touch on the recognition of an asset in the financial statements, same thing with the liability and the derecognition thereof. Then from there, we know we are done with the first topic. Then we get into the other aspects, which are more critical for this module. Is it fine?
Yeah.
Beautiful. Any questions for me so far with regards to what we have covered?
No, I'm okay. Thank you.
Was this fruitful?
Yes, very.
Awesome. Awesome. So I'm going to share the recording on the group. Then we'll take it from there.
All right.
Beautiful. Beautiful.